benefit. I mean, there is a couple of new guys with us, Brandon, and I welcome you, and I welcome everybody back after a long weekend. What we normally do is, the basic premise for the trade planning session is to identify the second most important thing about trading, which is, I mean, each trade is made out of three parts. The first part is the rules. Why do we buy? Why do we sell? Where is my entry point? Where is my exit point? Where is my risk? All these are the components that are part of, that make out a trade. But these rules by themselves do not make a trade. There is the second half of the equation to make the trade, and that is what to buy and what to sell. Choosing the instrument itself is as important as the rules that we apply in our trading. And this is what we do every week, and that is choosing and selecting which currency pairs we are going to buy and sell. When we are dealing with a currency, we're dealing, as I said before, I'm just using this quickly. If I type, for example, the euro yen, that is the chart for the euro yen, but there is nothing called the euro yen. When you're trading the euro yen, you're trading the difference or the rate of exchange of one currency versus the other. If you're going to buy the euro, this means you're selling against it the yen, and you're trying to capitalize on the difference. So the euro yen is made out of two components. It is made out of the basket of the euro, and that is the chart for the euro by itself as a standalone. And it is also made out of the yen, which is the basket of the yen made out by itself. And I'm gonna do this just once, just so I can record it. If I put another chart here, and as you can see, this is a chart for the euro, and the one on top is the chart for the yen. And what we are trading, or what you are trading when you are buying the euro yen, let's take something much more, let's take the Aussie yen, because it's going to be much clearer. So this is the chart of two instruments. As you can see, this is the chart of the Aussie, as you can see it coming down, and from those two we take those two together and we create the Aussie yen. So if I wanted to choose a pair, just by looking at this chart, you can see that the Australian dollar in general is coming down, and you can see that the Japanese yen is kind of going up a little bit, and it's been moving sideways for the last several days. So in this case, I can go short the Aussie and long the yen. But is the Aussie yen the best pair for me to trade against the Japanese yen? I know that the Aussie is weak. Now, if I wanted to trade the Aussie versus another currency, I want to choose the other pair, the other half of the currency that is the strongest currency, the strongest pair that is there out there today or last week. This is the one that I want to take and pair with the Australian. So for example, if you look at the Canadian dollar, you can see simply by looking at this chart, you can see how strong the Canadian has been for the last several months. So this way I can go short the Aussie and long the CAD. Therefore, the trade that I will take, I will maximize my results. And that is what we do every Friday, every Sunday. That represents 50% of your financial results at the end of the week, because choosing which pairs to trade is as equally important as your rules that you follow to trade. Okay, so having said that, we start like we do every week, and we look at the basket of the currencies so that we can choose. And we start by the granddaddy of all, which is the US dollar. And as you can see, looking at the chart of the US dollar, it has, if I look at the weekly chart from the beginning, you can see, first of all, I'm just going to spread it wide, but I'm just showing you the general trend is pretty much to the downside. And then lately, from the end of 2011, this is a weekly chart, we have been trying to get out or create what we call a trend change. And the structural point that would indicate a major trend change for the dollar to the upside has been the 8407. And as you can see, from 2011, the latter part of 2011 until now, at least for the last year, I mean, we're now in September 2012. Wow, time flies when you're having fun. This was in December, so pretty much a year we have been in this sideways pattern, testing 4 times the 8407 level, and we have been failing to go above it. At this stage here, we did put in a high, which is 84.24, so we did break above it a little bit, and then we failed to continue. This is a setup which we call the turtle soup, which again would have created an entry signal on the long-term strategy, but has failed to follow through to the upside, and therefore it will create what we call some sort of long liquidation. And we came down from the last several weeks. If you see over here, that was a minor structural failure on the intraday. As you can see, we have failed. I mean, when I go down to a daily chart, I'm decompressing the data. And right here, when we failed to make a higher high, I mean, this was my uptrend, we have one failure to make a high. The second here, that is my structural point. And once we broke through that, we did have a liquidation or a liquidation last week, and we placed in a low which is 81.22. Then we tried to make a little bit of a sideways move above that 81.22, and then on Friday we just sold off through the 81.22 and through the lower structural point that we have, which is the 81.07. Just want to find where the 81.07 begins. that's the 81.10 anyway. So we broke through the 81.22, which is this point here, and this again is important because it is a short-term structural point. I mean, it is a short-term structural point. I want to give it a different color so we can identify it. I'll leave it because it's blue, so I'm going to leave it. The sienna color represents significant points to me, but since I'm going to use the big dash so I can indicate a lower intensity or a lower power. And right now the dollar should capitulate and to continue downwards, and our buying point will be for the US dollar a trade above the 81.36. So having looked at that, I'm going to grade the US dollar as, in this case, as you can see from last week, for example, we said that the dollar was neutral to weak, the CAD was strong buy, the Aussie was strong weak, the yen was kind of neutral, the euro was strong, and the Swiss. So the pairs we took from last week was trading the short the CAD, the Aussie CAD, short the Aussie yen, short go long the euro Aussie, and short the Aussie Swiss. These were the pairs that we chose last week, and you can see this week the results have been, taking those pairs, the results have been magnificent on the, to say the least. So anyway, this week for the US dollar, the setup would be that the dollar is weak, and it's going to be, I'm going to give it a 2 dashes. This means it is 1 dash is weak, 2 dashes is quite, let's say, seriously weak, 3 dashes is going to capitulate, and we're looking for it to continue, and I want it to go and trade below the 81.07 or the 81. I wanted to take out the slow, which is the 80.96. Today is Labor Day. It's slightly weak here in the US. The markets are closed, so we're gonna take this day with a grain of salt, but still I'm looking for further liquidation for the US dollar. Okay, so the dollar is weak. The next currency that we know from last week was weak. I'm going to take it quickly, just looking at this, which is the Australian dollar. It's going to make our trade easy. As you can see, this was the plan. We had the structure point of 103.89. We broke it because this was a failure to make a high, and the structure point was also the previous high over here, so breaking below the 103.89 would have led to liquidation, and it has been moving very smoothly to the downside, and we're coming towards now the next structure level, which is the 101.54. Keep in mind there is also the Australian Royal Bank of Australia has a meeting this week, and they're supposedly coming up with some news, but basically there is nothing to say. There is no way in heaven they can raise the interest rates. If not, they're supposed to lower the interest rate to stimulate the economy. So again, we're looking for further decline and further weakness in the Australian dollar. So going back to the chart, so the Aussie dollar will remain short also with the US dollar. So the US dollar is weak and the Australian dollar is also weak. The next currency I want to look at, which is again very important, or it's current to the daily events, which is the euro. From last week we assumed that the euro is strong and it's going through the short covering rally, and the short covering rally would have indicated some movement against the US dollar and against the Australian. But anyway, looking at this is quite an interesting chart. And when I say interesting, we definitely do have a bear market in the euro. It is continuing to the downside, as you can see from here. It is a picture perfect kind of setup. You got your high, you got your price acceptance, you got the capitulation after the structural failure, you got back the retest and a move above the structure, which is the 104, followed by major capitulation. This here is as picture perfect as you can expect it. It came down to this structural point, it capitulated again, it came back, and it's just moving with a little bit, maybe over here we had a little bit of at this area over here we had a little bit of flip-sawing, which is around the 132. If you look at it at the daily charts, you will see that the number is 132.86, and this is one of the big structure points. And then we're continuing down until we come to this point over here, and the 124.40 that you see on the chart there. And what is created here is a minor failure to make a lower low, and a trade above the 124.40 can represent a structural failure to the upside. But that is of a lower magnitude. We need a lot of work. We need a well-defined structural failure that would say that we would let us say that the trend now, the downward trend for the euro has ceased or stopped, and now the trend has changed to the upside. This is, we might have gone into a sideways pattern, which is a big price acceptance zone that is developing at the time being, not yet a trend change, but we're building into this, we're getting into this narrowing, contracting, flip-flopping either side of a structure. I think that is the beginning of it, and that is our gift to the upside. So that trading above the 124, that would be our first signal of an upward move. The key now for the euro index is a trade above the 126.55. If we do come and trade above the 126.55, you're looking at a pretty strong move to the upside, and that would be a very strong short covering rally, which probably would take us to the vicinity of the 129 or so. But the key trigger for that would be the 126.55. So as of this, we trade what we see, we follow the rules, and the key for us is now what happens at the 126. We are now at 126 even. The structure point is 126.55, and you will be able to see that when we look at the specific pairs, that you will see that there has been structural failures to the upside in, let's say, something like the Euro Aussie, in the Euro CAD, in the Euro. In certain pairs, you would see that you started having those structural failures. They are all components of the Euro index, and therefore, eventually, the index as a whole, which is the sum total of all the pairs, is going to either break above the structure or fail. So with that, we're looking to have a bias, a positive bias for the euro to take it to the upside. So the euro, again, we're going to say it is still a buy. And of course, if it gets above the 126.55, it will become a strong buy. So when it gets above 126.55, we're going to give it two pluses to make it a buy. Okay. The next one we're going to look at is the Japanese yen. And the yen, by far, like I've been telling you for ages now, is the strongest currency out there. It is the strongest currency for the last 10 years, by far, technically and fundamentally. As you can see, from 2007, we are still in a bull market in the Japanese yen. It is moving kind of slightly in a very narrow range for the whole year, about 5 yen up and 5 yen down. I mean, and this is now resuming. It is strong, and the bias is to the upside. Every time it breaks below a structure, it comes down for one or 2 days, and then it resumes back up again. So the bias for us right now, we're above the 127.37. We are the index as 127.74. So the bias is to the upside, and we are looking for it to continue higher. This is the daily chart, and we do not, I mean, our sell signal would be in the Japanese yen, a trade below the 127.37. So our bias is still to the upside, and only if it fails below that, then we are going to sell it. So the yen would be a buy, again, as of the same as of last week. So the yen would be also a buy. So we'll be looking to buying the yen. The next currency we're going to go to is the Canadian, and this is what we have been looking at, the CAD, and this is when I showed you the choosing the pairs initially. Why do we do the trade planning session? Guys, you can see that from, I would say, May of this year, the Canadian dollar has been on a strong move to the upside. It came above the 99 figure, and now it is came back to this important structural point over here, which is the 101.71. This is the next structure on the index, and it is now the key. That, why am I saying it's the key? We're trading now at 101.42, the highest high we had for the last, which was set in August the 24th, was 101.55. So we have not violated yet the 101.71. And that means that the 101.71 as a significant point, or a momentum high point, or a structure point for the time being, is going to act as a magnet to attract the Canadian higher, because everybody's looking for all the buy stops that are sitting above this high. So it will be attracting. So we should be looking for a push up, and therefore the Canadian should be one of the pairs we need to focus on trading from the long side, i.e. going long the Canadian pairs, where I can be buying the CAD, and we will look, and we want to see it trade above the 101.70, the 101.71, and we need that price to be violated. We need it to go through it, and until it goes through it and fails, we're looking for a continuation to the upside. So the Canadian is, again, we're looking at it from a buying standpoint, and it is very strong. And of course it is strong, and our sell is going to be very indicative once it fails above the 101.17 or 101.71. Okay, I'm just So now we have done the next two that are left are the British pound and the Swiss. So let's do the Swiss first, because it's also tells us a little interesting story. I'm sorry I took a little bit longer time in this in this homework, because I was looking at it earlier and I saw a lot of interesting stuff, so I want to share it with you. I want you all to be having a good understanding where we're coming from for the next week. If you look at the Swiss pair here, and I want you to have a mental picture of the euro. Let me put the chart for the euro back again. As you can see, as you recall, I mentioned in the euro we have the second structural point, which is the 126.55, and we're coming towards it, and it's also acting as a magnet. Since the Swiss and the euro are very closely correlated, because the Swiss National Bank has pegged the euro to the Swiss, I think 120 or something like that. If you look now at the Swiss franc, you can see that we already came, if this is synonymous or similar to the 126.55 on the euro, we have pushed above it in the Swiss. And on Friday we had a nice push higher, taking us all the way up to the 105.27, which again slowed down a little bit, and because of the holidays, but right now we are 104.91. Therefore we should be looking for the Swiss actually to explode higher, and because it's above the structure, and we take into consideration that today is a holiday, and they still held it above the 104.67, so that is a very positive sign for the Swiss, and we should be looking for the Swiss to go higher in a strong way. And if it does, guess what? It is going to pull with it the euro, because the euro and the Swiss are tied to each other. There is like a band. So if it does, the Swiss pushes higher, it's going to pull with it the euro, and that's a very good sign for the euro. So we're going to say now the Swiss, I'm going to change that. It's not just a plus, it is actually two pluses, and I'm looking for it to really push higher. So we are going to be looking at buying the Swiss, buying the CAD, and the other important thing, guys, is if you go back to the chart for the Swiss, you can see that we're now at 104.91. So our sell signal is very easy. If it gets below 104.67, your risk on this trade is 30 pips on the whole index. So your risk reward ratio is fantastic, because you're only risking 30 pips if you go long, and if you get a short covering rally, this should take us pretty much to this area over here now, which is around the let's be conservative, which should take us around the 106. So we probably have about 100 points to the upside on that. Okay, that's the Swiss. Last but not least is the British pound, and then I'm going to save the recording. The British pound is again in its narrowing, contracting, la-la land, whatever. It still has some sort of an upward bias, but we're still inside this big. So the pound, you want to play it on the either side of the support and resistance, and when you see something like this, that will tell you that it is not really pound strength, it is weaknesses of the other. So therefore you probably would see that the pound Aussie is very strong, because not because the pound is strong, but simply because the Aussie is weak. And you can see, for example, that the pound CAD is kind of weak. You can see that the pound yen, and you will see that it's maybe slightly moving against the dollar. So you might see that the pound dollar is going up. You can see that the pound Aussie is going up. You can see that the pound New Zealand maybe is going up, but it's not as strong. So the pound would be best paired against the weak currencies, which we pegged from last week. So we're gonna say that the pound is, it is neither strong or weak. It is kind of neutral. So we are only going to peg it against the weak currency. So this is how we're going to play. The primary focus for us this week will be the Australian dollar and the Canadian. These are the two. And we're going to also add with it so the primary is the Australian, and we're going to peg it now. So we're going to take the long the Euro Aussie. We are also going to go short the Aussie CAD. So we're gonna, let's do this because it's, you know, the alteration. So we're going to go long the Euro Aussie. We're going to go short the Aussie CAD. We're also going to go long the pound Aussie, and we're also going to go with the Aussie yen. And of course you can see that probably we'll have a magnificent move against the Aussie Swiss. So if I'm putting them in order, I will do this: Aussie, Euro Aussie CAD, Aussie Swiss. These are the ones that will give us the most move. Then we're going to take the pound Aussie, and then the Aussie yen, and even the Aussie dollar will actually be moving to the downside. So we're selling the Aussie across the board. Next, we're going to be taking the Canadian. We want to take the dollar CAD. We want to be taking the pound CAD. If you wanted, we can take a look at the Euro CAD also, but I wouldn't be looking at shorting the Euro with that until I see the chart. And of course we can take the Swiss. We can do the Swiss yen. We can do the pound Swiss. And we can do the dollar Swiss. So we can take also we have to take a look at the pound yen. And of course the Euro yen, depending on how it moves. But primarily we're looking at the Aussie this week, short across the board, the Canadian long across the board, and we're going to pair the pound against the weak currencies. Okay? So let me save the recording, and if anybody